Welcome to the next session of the course out there. Rather, I would say welcome to the second module of the course. In the first module, we spent a lot of time in trying to understand the basic financial statements, the P&L statement, the balance sheet, the cash flow statement, and what we did was we tried to understand something called as financial accounting. Today we are moving to the next module, what we call it as cost accounting, or the other way to mention it is also what they call it as management accounting. Management accounting out there. So, when we say what do you mean by cost accounting, management accounting, what is these two names given out there? Now, when I say costing or cost accounting or management accounting, we are going one step prior. Let me make that very clear. We are not moving one step forward, we are moving one step backwards out there. That is, in a financial accounting, what did we do? A transaction happened, a transaction took place, we went ahead and recorded the transaction, and then we prepared the profit and loss statement, and then we knew whether we are making a profit by manufacturing and selling a product, or we are not making a profit by manufacturing and selling a product, and so on and so forth. Now, in cost accounting, what are we trying to do? We are trying to use this for decision making for the management. Now, that is where management accounting comes in. We are going to use this for decision making of the management. Now, that means to say, before you in financial accounting, you sold a product for a particular price, you recorded this is the revenue, that is the price at which the product is sold, perfectly all right. But how do you even decide at what price you should sell the product? Before you even embark on selling a product, you ought to know what is going to be the cost of manufacturing that particular product and what are the other overhead costs that are going to incur. Then you will know what is the price at which you can sell the product, and we will know whether you will make a profit or not out there. You will anticipate. You don't set up the facility, manufacture the product, sell the product, then you realize that you are not making a profit or whatever it is. So, prior to the event happening, what happens? You try and back calculate what should be the cost of the product, what could be the cost of raw material, what could be the cost of the labor cost out there, what could be the cost of overheads, what could be the cost of administrative cost out there associated with it, what should be the cost of selling and distribution cost associated with it. So, all that you will sort of factor in and then arrive at the total cost of the product, which you will eventually sell in the market, and so on and so forth out there. So, what are we trying to do in cost accounting and management accounting? We are trying to look at, that is, in a financial accounting, you enter the transaction after the in the financial statements after the transaction has taken place. Right here, before the transaction occurs, before the event occurs, you are trying to look at what is the best possible way. What is you are looking at, what do you call it as? If I have to say, you are looking at decision making out there. What is the kind of product mix I can have? What is the kind of products that I need to manufacture? When will I break even? When will I not break even? To what number of units that I have to sell to achieve a desired level of profit? So on and so forth out there. So, that is what we deal, especially when we deal with cost accounting. I have given a simple logic out there. Needs of management. Do you want to say, sir, is financial accounting not important? No, financial accounting is also important. It is concerned with reporting. Both are necessary for the management out there. Financial accounting takes care of reporting the information to the external stakeholders, whereas management accounting is concerned with providing information for people within the company. Let me repeat. Management accounting is concerned with providing the required information for the managers of the company to make decisions, whether the top management or the middle management, to make decisions, to formulate plans, and as you can see out there, to create control systems out there. So, that is what it is, internal to the company, whereas financial accounting is external to the company. Will this management, where can I see this management accounting information? Management accounting information is not for external consumption. It is a, what do you call it, as a very confidential document, because imagine if your competitor knows what is the kind of cost that you are going to incur to sell a product, he knows what is the percentage of profit you are making on a particular product, then naturally what happens, he can between the market. So, this is more and more of a confidential internal information for the company per se. So, that is what management. First differentiation, financial accounting post event for external user, management accounting pre event for decision making internal to the company out there. Now, what happens? We classify the cost into various aspects out there. We classify the cost into various cost objects in terms of manufacturing companies. Then we also lot of look at cost behavior, and then we make decisions. We also make financial statement out there. We make what is called as a cost sheet out there. We will take an example in the as we go along out there. We will take an example of preparing a cost sheet out there. So, we will prepare what is called as a cost sheet, that is what we say preparing a financial statement in that particular case. But more and more I am getting a little more deeper into it. I am what do you call it, rephrasing, re-emphasizing the same thing what I talked about. Accounting system. An accounting system is a broad umbrella. It basically what we are trying to do is accounting system accumulates the financial management accounting data, etc., all that information out there. And the accounting system is divided into two parts. What you see on the right is the financial accounting, what you see on the left is management accounting. Financial accounting, financial statements, external users, stakeholders are very, very high. Management accounting used internally for the organization. For example, if I have to plan, so if the organization says that I manufacture 3 different kinds of product, and this particular month this is the kind of profit I want to make. I want to make a lakh of a profit out there this month, and these are the 3 different kinds of product, and each of these product has a certain cost behavior out there and certain market out there. Then I go back and plan my production mix in such a way that I will manufacture X amount of product A, X amount of Y amount of product B, Z amount of product C, so that, and if I sell it in the market at the price which is already fixed, I will know I will making whatever amount of profit, that profit could be equal to my desired profit what I have, could be one of those. It helps in decision making planning, what we call it as cost control exercises. Let me repeat, it also helps in cost control exercises out there. Now I know I am not making a profit, but I want to go back and find out why I am not making a profit out there, or why is my profit margin very small. Am I spending too much on material? Am I spending too much on labor? Am I spending too much on factory overheads? Am I spending too much on administrative overheads? Am I spending too much on selling and distribution overheads? And in each of these, the sub-classifications, I can basically look at and control that particular aspect out there, and that is what helps in controlling also. Or for the internal consumption of the organization, purely used by the internal top management or the senior management for decision making. That is what is management accounting about to. And that is what we are going to learn as subject. I am going to cover the basics. I am not going to go deeper and deeper into what do you call it as the management accounting or cost accounting part of it. I am going to touch, I am going to maybe next 6-7 hours out there or 8 hours out there, I am going to talk about management accounting. I am going to touch upon the key aspects out there. When I say key aspects, I am going to talk about some kind of a decision making setup kind of a thing, and the key basic aspects is what I am going to talk about in this particular case out there. Continuing this, I have put up a table of differences between financial accounting and management accounting. A table of aspects that could basically vary between financial and management accounting. For example, as I said, we talked about the users, number 1. We talk about next time perspective. Financial accounting is historical, that is after the event is over. Cost accounting, future, for me to manufacture and sell the product, I need to know what is the cost involved in it, so future perspective. Now, in the terms of verifiability versus relevance out there, financial accounting always audited by external auditors. The external chartered accountant basically will come and audit out there, verifiable. Whereas here it is on relevance out there. Now, what do you mean by relevance in this particular case? Relevance, we will say, let me take an example. Suppose you are a multi-product firm and you have a single expenditure, for example, factory rent. The factory is used for manufacturing all the 3 products. Now, I will have to divide the rent among these 3 products out there. Now, what is the best way to do it? Somebody will say, divide on the basis of the sale value, divide on the basis of number of units, whatever it is out there. Now, I will have to divide it on the basis of some relevant basic information. Or for example, for decision making, when we say, we look at relevance out there in this particular case. I will deal more with relevance as we go along out there. We will deal with more with relevance out there as we go. Now, in this particular case, what happens in the financial accounting? We are emphasizing on precision out there, whereas here emphasis management accounting, we are not looking at precision, we are looking at a range, a timeliness out there. That is what we are basically looking out there. Financial accounting, we follow IFRS, Indian Financial Reporting Standard, International Financial Reporting Standard, Financial Reporting Standard, International Financial Reporting Standard, IAS, Indian Accounting Standard, International Accounting Standard, US GAAP, whatever it is out there. Now, cost accounting is not bound by any of these. Cost accounting is for certain industries are bound by CA or cost accounting record rules out there for certain industries, but not across all out there. Requirement, financial accounting, mandatory, every year they have to prepare a financial statement and submit it. Cost accounting, no such mandatoriness. It is basically internal for decision making. The company will prepare it as and when they require it out there. I have given you some more details on management accounting, what is the process out there. Now, I am moving into little more definitions of it. I am going to introduction of the term cost and the classification for the purpose out there. Let me take for this matter right here. Now, we say cost. How do you define cost? Now, normally what I have heard, people would say, sir, cost is nothing but the amount of expenditure, or they would say, no, the amount spent is what we call it as cost. This is what they basically cost. The expenditure means the amount basically spent is what is the cost out. Am I right in defining cost? Well, yes and no. Let me take an example. Imagine that I quit this job today and I bought a retirement villa facing a beach, and then in a city which is in a city which has a sea out there, which is seashore, which is at the sea level out there. I bought a villa facing the beach, and I am just putting my legs and relaxing and cooling my heels out there. I am not doing anything, I have just taken a break. But suddenly I get bored. I have some skills using my 10 fingers out there hand. I can make beautiful toys using my hand. I am not going to use any mechanized instrument out there, mechanized machine out there, none of it. I am going to use the skill of my hands, use some material, maybe some piece of metal I am going to buy, wires I am going to buy, and with that wires I am just going to make beautiful toys out there and I am going to sell market. And all that I do is I go buy the machine, buy the wires out there, reach home, and I am going to sitting in the balcony looking at the sea, looking in my courtyard out there, looking at the sea. I am just going to be using my skills in my hand and make the beautiful toy out there in the process. Now, I want to sell the toy. When I want to sell the toy, I say my profit requirement, I would say my profit requirement is, let us say, 10% out there, 10% of the cost. 10% of the cost, that is, my profit is going to be, I am just going to add 10% of the 10% to the total cost of the making the toy and arrive at the selling price there. That is what it is, and arrive at this. So, what happens? Cost plus 10% of the cost is equal to my selling price out there, and that is what I want to do. Looks very nice. Now, I want to list down the cost that is there in manufacturing that basic toy out there. What is that cost? Somebody would say, sir, the cost of material. Yes, the cost of the wire, the material, raw material. Sir, the cost of transportation for going and buying the material. Okay, I will say cost of transportation. For buying material. Sir, cost of capital, I have not borrowed any money, I have used my money to buy that raw material out there. Sir, the cost of advertising cost to sell the particular product, well, I am not really advertising. Okay, even if you want to say that, let me also add that advertising cost. Cost of labor for manufacturing that, I have not costed, I have not hired anybody to do it. I have a beautiful skill with my 10 fingers out there. I am just making the toy in my sitting in my courtyard out there, looking at the sea. That is all what I am doing. I have not hired anybody to manufacture the toy, so no labor cost. No salary for you, nothing. I was just putting my legs up and watching the sea every day. Instead of now just watching the sea, putting my legs and watching the sea, I am just making that, using that, what do you call it as, wire, and making, using that and making. I have not neither lost a job, neither am I losing something, I am just doing it. There is no cost of labor that is involved in the process out there. So, how will the labor cost come? Salary for you, no salary for me. I am not dependent on that. I am not dependent on that. I have quit my job. If I had not been making the toy, I will be sitting idle in the process. Rent for the place of making the toy. It is my house courtyard. I am not rented any place. If I am not making the toy, I am just going to be sitting there in the courtyard. If I am making the toy, I am sitting there in the courtyard and making the toy. That is all. There is no specific rent that I am paying because of this out there. Electricity consumption, again nothing. The toy is made from a beautiful 10 fingers out there. Now, there is a bulb, or there is a light out there, artificial lighting or whatever lighting I have created in the courtyard. That light is going to be functional, or light is going to be on irrespective of whether I make the toy or not, because I am going to be sitting there in the courtyard. Okay. Then what is the cost out? Do we say it is only the raw material, the transportation cost of the raw material for buying the raw material, the advertising cost? Sir, packaging, okay, take it as packaging. Agreed, let me take that as packaging also. Any other cost involved in the process? Let us think. Electricity we said, no. Transportation yes, raw material yes, advertising yes, packing yes. Sir, you have borrowed money to buy raw material. Imagine I have not borrowed money. I have enough money, that is why I am relaxing. So, I will basically, I have not even borrowed money. Instead of keeping the money idle, I have just in the cash box, I am just going to use that money to buy the raw material. Then it becomes very difficult. That is all. So, is cost only this? That basically when we say cost out here, the cost what he meant out here is basically whatever he said here pertains to the amount spent out there, pertains to the amount basically spent out here. So, in this particular case it pertains to the amount spent. If I take the amount spent, that is all what is there. Whereas, when we say cost, cost does not pertain only to the amount spent. Cost means and includes, what do we call it as now, something called as notional cost. Now, what is this notional cost? Sir, this notional cost is very confusing, it is very funny. Let us take this same example of the tie. I manufacture the tie, beautiful. The tie is so beautiful that people start loving it. Then I get an order. I get an order for manufacturing and supplying 10,000 toys out there, and I realize that if I have to make 10,000 toys, it will take at least about 10 years for me to do it. So, what do? I cannot manufacture it in my courtyard. So, my toy I am selling it whatever based on the these three costs out there, raw material, transportation out there, based on only these three costs out there. Imagine the toy, and I have a 10% markup out there, and I am selling it. All these are amount to about 90 rupees out there. I said 10% markup, that means 9 rupees. So, 99 rupees I am selling the toy out there as of now. Raw material, transportation, advertising, packaging, everything put together is 90 rupees plus 9 rupees, 10% profit I said. So, 99 rupees I am selling the toy. Now, 99 rupees, such a beautiful toy, people love it. So, now I get an order, suddenly I get an order for what is called as 10,000 toys out there. When I get an order for 10,000 toys, I got to manufacture these 10,000 toys and sell it, and I know I cannot manufacture it alone, because if I have to manufacture alone, it will take 10 years out there. So, what do? Immediately I go first hire a place to manufacture, because I do not want to be using my home to manufacture this. Then I hire labor to manufacture. Then whatever it is, these two basic aspects I hire out there to manufacture, then I manufacture the toy. And then I realize I have to pay for the place, I have to pay for labor, and I see my cost coming to 130 rupees out there. And then I have to have a markup. This is only my cost out there. So, I know that if I sell it at 99 rupees, I will be incurring a loss, miserably incurring a loss out there. Loss of 31 rupees or $31 I will be incurring for every toy that I am selling. Imagine for 10,000 toys, what is the loss out there? So, what did I do? I calculated the cost, added a markup and fixed it a price at 99. But did I include all the cost? No, I included only the such cost where cash outflow has occurred. You know what is a cash outflow? I incurred only such cost where cash outflow has occurred. Cost does not mean cash outflow, cost means and includes. That is what I am going to put out here, this slide. Means and includes any amount of expenditure which is actual. Actual means cash outflow. The other one is notional, which is what we call it as attributable. Attributable, that is what I said, which can be attributed to a given thing. Now, how do I do that? Now, I will come back and say I will go back and work on the cost. Now, when I manufactured the tie, I said yes. Somebody said raw material, yes. Somebody said cost of purchase, cost of transportation of raw material, yes. Somebody said advertising cost, yes. Somebody said what do you call it as, what is the other cost we took in the last class? Packaging cost out there, yes, packaging. Now, plus, big plus here. I am going to use a different color in this particular case. I am going to use a different color. I am going to use blue out here. Hopefully, blue works. Yeah. There are notional costs. Notional. Now, I said labor. Now, you said no labor, sir, nothing, you do not have to, because I am doing it myself. If I am not doing that, I am going to be sitting quiet and what is called as watching the sea, putting my legs up from in the courtyard of my sea facing house and watching the sea out there. Fine, you can watch the sea, you can go jump in the sea, I do not care about it. But had you hired somebody to manufacture the toy, what is the amount that you would have paid? Please note, I repeat. Had you hired somebody in that place to manufacture the toy, what is the amount that you would have paid out there? Now, that is what becomes what is called as, we call it as notional cost of labor. Notional cost of labor. No, sir, why can't you take your cost? Because you have left your job and you're cooling your legs out there. Now, why can't why can't you take the salary that you have foregone? I cannot take the salary what I have foregone, because that level of skill, you don't need a PhD to make the toy with the wire out there. Because my salary level will be very, very different compared to the skill level. My salary and the skill level are very different. The salary is commensurate with the skill level what I have, and that is very different. And that skill for which I am earning today, that is teaching, is not the skill I require for manufacturing this toy. That skill that I require for manufacturing the toy is very different, and that person with the skill is paid very differently, not exactly my salary. So, what happens? I will take, if I had hired somebody with the skill set to manufacture the toy, what is the amount of money that I would have paid? That is what we call it as notional cost of labor out there. I am going to give you one more example. For example, he said, I would say notional cost of rent. Sir, what is notional cost of rent? Now, imagine I had hired a place to manufacture this toy. If I had hired a place to manufacture this toy, I have to pay rent. Now, why don't you take the rent what you pay for your villa, beach facing villa out there? Take that as the cost out there. No. If I have to get into a business of manufacturing that toy, I don't need a beach facing house there. I will need a small industrial shed somewhere in a industrial location out there, a small piece of space out there which is sufficient enough to manufacture this toy. No, that is what becomes a notional cost. Not the house in which I live. I cannot use that cost as a notional cost out there for this, in this particular case, because the house I bought, that is not the kind of house I require, that is not the kind of place I require for manufacturing this toy. For manufacturing this toy, I need a small in an industrial shed, a small shed for space is what I take, shared space is what I will take. What is the cost of the shared space if I had taken for manufacturing the toy? That is the cost what I will add here, notional cost. So, that is what is a notional cost. For example, now notional cost of electricity, utility, instead of electricity I will say utility. If I had hired a space in an industrial space, a shared space, I would have paid for utilities, maybe power, maybe water, whatever it is out there. What is the amount that I would have paid for utilities? Yes, that becomes a notional cost. So, when I am looking at in this particular case cost, when I say cost, cost does not mean only what is you spend, that is what is the cash outflow. Cost means and includes the amount of money that you spend plus any costs that can be attributable. These are the three costs that can be attributable in this particular case. These are the costs that is attributable. Somebody can say, sir, if you get into a large scale, then you will have a license, you have to get a what do you call it as a permit, you have to get a license, there is a fee. Yes, you can add all that in the notional cost out there. When I say, then if I considered all this and then arrived at a price, I would have arrived at a price right then at 130 and I would have had a markup of 13 and I would have sold the product at 143. At 143, if it is attractive or not attractive, let the market decide. I might get an order for 10,000 toys, I may not get an order for 10,000 toys, but this is what is the cost out there. I might give a discount. Now, because I am not incurring all this, I will give a discount of some 10-20 rupees to somebody, possible, that is your decision later. But when I have to arrive at the cost, I know the cost is 130. If tomorrow I have to make 10,000, the cost is going to be 130 per toy out there. So, what happens? Notional cost is all involved. So, when we say cost, cost means and includes all the costs that can be attributable plus any cash outflow pertaining to a particular given object or a given thing. In this particular slide, I have used an example of given thing out there, a given object out there. For a given object, all the costs that can be attributed plus all the cash outflow that can be attributed to that is all what we call it as a cost. Cost means and includes actual plus notional. Notional means attributable. I hope I am clear now. That is where I said costing. Now, it is just a technique of accounting for the cost, that is accumulating the amount of cash outflow plus accumulating what is called as the attributable or notional cost out there. Putting all these together is what we call it as cost accounting or costing.